Maintaining inflation target at 4% is appropriate for India. That's what a recent working paper released by the Reserve Bank of India is saying. Now, on Monday, the Reserve Bank of India issued a working paper that was titled Measuring Trend Inflation in India. This working paper is authored by Mr. Harendra Kumar Behera as well as Deputy Governor Michael Debabrata Patra. Now remember, this working paper has also come ahead of the inflation target review. The inflation target is up for review in March 2021. Currently, the inflation target framework for India, inflation target is set at 4% with a lower tolerance of 2% and a higher tolerance of 6%. Of course, since the COVID-19 pandemic began, we have seen inflation cross the 6% mark as well in the last few months. But that's what the paper also says. The paper finds a steady decline in trend inflation to 4.1 to 4.3% since 2014 until just before the COVID-19 pandemic struck. The release by the Reserve Bank of India on the working paper also says that central to the design and conduct of monetary policy is the concept of trend inflation, the level to which actual inflation outcomes are expected to converge after short-run fluctuations from a variety of sources die out. The paper seeks to estimate trend inflation in India to find the answer to a question that goes to the root of flexible inflation targeting. Is the choice of the target for inflation consistent with its trend? So the paper is trying to find out whether the choice of the target for inflation that we have said is consistent with the actual trend of inflation over the years or not. Now, it also says that the paper finds a steady decline in trend inflation to 4.1 to 4.3% since 2014. A target set too below the trend imparts a deflationary bias to monetary policy because it will go into overkill relative to what the economy can intrinsically bear in order to achieve the target. Analogously, a target that is fixed above trend renders monetary policy too expansionary and prone to inflationary shocks and unanchored expectation. Now, the paper also details that the decline in trend inflation since 2014 is, however, coincident with a flattening of the Phillips curve. Underlying this is a decline in the inflation persistence, indicating that households and businesses in India are becoming more forward-looking than before as credibility associated with monetary policy is increasing, and also an increase in sacrifice ratio. Further disinflations will become costlier in terms of the output foregone. At the same time, the credibility bonus accruing to monetary policy warrants smaller policy actions to achieve the target, says the paper. It ends by saying this points to maintaining the inflation target at 4% into the medium term. So there is no need, according to the paper, to change the inflation target that we have set currently. It says that we should maintain the inflation target at 4% into the medium term at least. And it says, if it ain't broke, don't fix it. So, well, if there's nothing to really change about the inflation target looking at the trend, there is nothing to fix as well. Remember, in the last Monetary Policy Committee meeting, Governor Shakti Kanta Das also put out the CPI inflation projection at 6.8% for Q3 of FY21 and 5.8% for Q4 of FY21. He also said that for the first half of FY22, the inflation is predicted to hover in the range of 4.6% to 5.2%, with risk continuing to be broadly balanced.